Hey everybody. So we have another exciting week in the market. We have a lot going on. Volume is increased, volatility is increased. Things are just going nuts in general. So first of all, on the daily, it looks like if the QQQ can break over this 353 to 355 range, we can easily head up to 360 or higher, right? So this 353 level is, very important because we had this monstrous volume day on the 24th, and we couldn't get above that level even with all that volume. So, that level has become a significant resistance level, right? Because it was also the low of this drop and the low of this pullback here. So, this level has a lot of significance, and so does the 9 EMA because we haven't been over it since, up here. So if we can get over the 9 EMA in the daily, we can definitely, head up to the 360 to 362 range, maybe even test the 200-day moving average. But we're not out of the woods yet until we get back up into this 388 plus range. In which case, we could still head down. But we're not out of the woods yet. And until we retake that 200-day moving average and hold above it, we're still not in, that great of a situation in the market. So, we have a lot of earnings this week, and the big tech companies that could move the QQQ quite a lot in either direction. So, once we get up to this 200-day, which I think we will, honestly, once we get up to here, we can definitely see a large move in either direction. The next level over the 200 days is 370, and over that we can really, head higher. But yeah, so for just the immediate future, we have the 353.53 level right above and the 9 EMA, and if we can get above those two, we can head up to the 360 to 365 range. And then for downside, it's 340. If we break under 340 and close under 340, that's really bad, and we could probably head down to 330 or less. And then under 329 is where we can see 315. Actually, let's go back to that real quick. So also on the weekly, we had a very, very, very high volume week this past week. Looks like the highest volume week in 3 years, which is pretty significant to me. So we need to have some follow through this week. And if we're gonna be bullish and go to an all-time high, which is possible, anything's possible in the market. Next week we could close at 398 or 400, who knows, or we could close at 300. Literally anything is possible in the market, and it's very important that you know that. But so we had the significant drop and recovery with a lot of volume, so we're going to be watching this week for a follow through. It looks like that 360 level is really significant because it also would be above the 50-week moving average. So that 358 to 360 range can definitely hold up as resistance. So on the weekly chart, I have 358 as a major resistance. So I guess that's a very important level to watch as well. A little bit different than what I have on the daily with the 353. So yeah, 358 is a level of significance, and so is 362. Next up, we have SPY. The S&P 500 just had a major reversal candle and found a lot of support at the 50-week moving average. I see a lot of similarities between this bottom here and then this bottom here, which is strange because, when you look back here, we had a ton of selling volume and we dropped like 50% before we had this massive reversal, right? But, we didn't even have that much of selling volume, but look at how high the buying volume is, right? That's all buying because we closed this week higher than we closed the week before, and we went all the way down to here, and all with between all those million shares of volume, we ended up closing higher. So that could be very bullish, and to show that maybe we're going to all-time highs, we'll need another big week of high volume. And ideally we'd want to close like at the top up here around 460 if we want to go bullish. But yeah, so there's a lot of similarities there between this bottom and this bottom. We have a high volume reversal after a downtrend, so that's interesting. And I'll definitely be watching this 50-week moving average to see if we break under it again. The 420 level is the pivot point on the weekly here, it looks like. And then under 420 is when we can see 414. But yeah, so 420 level is huge for downside, and then 455 is huge for upside. Also, we just had a monster close on Friday. Whether it was a bull trap or not, I don't know, but it doesn't look like it because of the significant buying volume, right? So if the volume was lower, right, say like this day, we pushed into a resistance with low volume, right, and then we reversed. When you push into a resistance with higher volume, it gives you a higher likelihood of breaking through it, in my opinion. So, the volume's a big tell here. We had more volume this day on the upside than we had on the downside this day. So I think that we can definitely rip if we can get over this 200-day and 9 EMA. It's very interesting that they're, right there on top of each other. And it also coincides with this 441.44 level. So, I think over like 444, let's say 44444, just why not? If SPY can get over that number, it can easily see 450 or 453. So I'm gonna write that number down because that is a huge level for the SPY, and if we hit it, we can fly. That's like the magic number for upside, in my opinion. If it hits that, it's gonna go nuts. We're gonna run like 1% that same day, at least. But yeah, SPY can definitely see the 450 to 453 range. That's like the next area of resistance, in my opinion. If we can get over 444, 44, so I'd be like a 1% run, 444, 44 to 450. So yeah, I'm watching that. Seems like it's definitely possible that we can run. This is like, the most oversold we've been in the past year or so. So can definitely bounce and run a bit. As for the VIX, the VIX got to like the most elevated level it's been in quite some time. And as you can see, when the VIX gets highly elevated, usually it pulls back quite a bit, at least the 200-day, right? It did that here, did it here, and then it actually, collapsed here, did it here. Whenever the VIX gets very high, it almost always pulls back to the 200-day moving average, besides when we had the bear market of 2020. So, further breakouts in the VIX would be a sign of a bear market, right? So if we get over 41 VIX this week, I'd say even if we get over like, the 37 level, we might head to 50, because technically when the VIX breaks out, it almost never, retests its high. It usually just breaks out and then tanks. So if the VIX does happen to break out higher and, let's say it closes over, 33.53, That could be extremely bearish for the market. As the VIX heads down, the market heads up, and as the VIX heads up, the market heads down in almost all cases. But I think we can definitely see a pullback at least to the 21 day down here. So if this pulls back down here, the market can rip quite a lot. The PCALL is also pretty elevated right now. At 0.95, it closed on Friday with the market very bullish. So, as the PCALL decreases, the market normally, goes up. So since the PCALL is so high, that means that a lot of people are positioned for a move to the downside. And a lot of puts are open right now. So basically, it means a lot of people are bearish and they're positioned for downside. So, as this heads down, the market will usually head up, especially when it's like at an elevated level here. And when it's this elevated, that usually means there's a lot of steam for an upside movement. So if we do get an upside movement, it could be pretty large. It might be short-lived. That's possible in my opinion. But we definitely can see a large upside movement with the PCALL up here. I'd like to be buying puts when the PCALL is down in the 0.5 to 0.6 range, and then getting out of puts and being in calls when it's like above 1.